Hello everybody, this is Coach Darryl with Hola Prime, and we are going to do a quick review of gold. This will be a weekly gold review that we will publish probably midweek every week. I would like to start out by saying that I trade all these futures instruments using volume profile and the auction market theory. So it's very heavily volume based and very little indicator, highly discretionary at this point. So I'll take you through kind of what I'm seeing in gold, and let's just move in. Project X, where I've already got a gold chart sitting here. This is a 5-minute bar. Now, one thing I do need to say is that I do not trade time-based. I'm not dependent upon candles opening or closing or any type of, 30-minute candle, 15-minute candle, 5-minute candle, what have you. I'm strictly volume-based and the volume profile off to the right side, which I will get to in a minute. But a couple things I want to point out. I'm located on the west coast of the United States. It is well after midnight here on September 9th, and we are in the London session in the overnight, and we made all-time highs in gold yesterday in the regular US session, the RTH, which is right here. We tagged basically 3685.8, I believe, something like that. All-time high in gold that was set hours ago, and this profile is showing the RTH US session trading movement for gold all the way up until 2 o'clock on the West Coast closing or 5 o'clock Eastern. I track this all the way through. I know some people will track it till 4 o'clock Eastern on the cash close. I tend to go all the way out. So the profiles sometimes can look differently based on how much volatility and volume we have in that last hour from halting and settlement in futures. As we see here, we open up again now. This is 3 o'clock in the afternoon when Asia opens up. When New Zealand, Australia opens up with futures, it's 3 p.m. for me. It's 5 p.m. in Chicago. That's when we open up a new daily session. So here we opened up in gold. We did a little bit of responsive selling. We came down here. This orange line represents kind of the overnight low. I'm just tracking the overnight low. Again, I don't really use indicators, but I do track where things have moved in comparison to where they were in the prior RTH session or overnight session. So this is an overnight low that we've come down to. It's about the 3669.6 in gold. This pink line is point of control. This is the highest traded price by volume. And this goes back to the other session from yesterday. In Project X, I can't really anchor it, but this does show and reflect where the point of control was on the RTH session in the US yesterday, which was September 8th. And that is at 3675.9 in gold. So interesting thing that happened. We opened up here. We had some responsive selling down or profit taking. Came down to an overnight low, which, it doesn't really mean anything. It happened to be kind of at value area low, also a low volume area. When I draw this, and I'll bring out a brush here, you look at this profile and you get these fingers that come off here, right? This is developing. Right out here, this is the point of control, this heavy point here. So we notice that we come down immediately when we opened up the Asian session. It just came down to low volume, but it also came down to the value area low of yesterday. And no sooner than we started marching right up. Buyers came in and pushed this thing up to a new all-time high right here. Again, had a little rotation, come back down, back up. Boom, all-time high in gold. And this is currently the all-time high, $3,699 an ounce. And we are $1 away from 3,700. So do you think we'll hit that today, tomorrow, this week? I would think pretty highly. But also, and this is very, very telling of what gold does and how it responds, gold can get very whippy. Right here at the 2300 hour, which is 11 p.m. my time, September 8th. Frankfurt opened up. This is an hour before London. Immediately, heavy responsive selling all the way down. And let me clear this off of here so that you can see this. Let me get rid of my little squiggly line so we can talk a little bit clear about how this whole thing looks. What does it do? It came down almost retested the point of control. Again, this pink line, which was the highest traded price for the day in yesterday's US session. Is that a coincidence? I don't think so. That's how I use auction market theory. You know, we're going from areas of low volume to areas of high volume. We're testing and retesting prices. So we came back down, we came back up here, and now we're bouncing around kind of around this other distribution here. Long story is that will we come up here and get to 3,700 before the US opens here in the overnight, after the US opens tomorrow, or at some point during the week? I don't know. Let's also look at going back and seeing all the other daily profiles. You can see here, gold's been on quite a tear as of late. All of last week, I mean, look at this thing, 45 degree, straight up, right? Oops, straight up. So we have a Labor Day holiday here in the US where I do not track the daily profiles, okay? So when you look at, this is yesterday, Monday in the US, Friday, last Thursday, last Wednesday, last Tuesday, you have this whole overnight here from Sunday through Mondays, which was a Labor Day holiday in the US. We had a halted session, closed early. I do not count this as a profile. I go all the way back to prior Friday and then looking at the other end of the week. But you notice all this stuff. Here's how I use volume profile. All these little, let me get my little arrow here. You guys can follow along. All these high volume nodes, these are all areas of very high traded volume. Conversely, the low volume nodes are areas where price doesn't stay there very long. It doesn't build up enough of a track record on and printing time and sales. So you end up getting these very jagged looking profiles. One thing I do want to note, if we do happen to sell off in gold, we have a gap. We have a gap with Labor Day. We have a gap with Labor Day right here. And again, it's a weird sort of gap because there's a holiday and a halt. But if we were to come back down here to fill this, that would be an area that I would be looking at, which happens to be a range area about 35, 39, all the way down to about 35.17. It's a pretty good gap. And it also happens to coincide with low volume right here. And so we could have some, granted, it would be a big sell-off. But if we came back down here, we could fill this gap. We did have another gap also that was made in this from September 2nd to the 3rd. We had a little bit of a gap, but guess what we did on the 4th? Came down, filled that gap, came back up. So we have been closing all gaps and trading and marching ever higher, almost making a new all-time high in gold for the last 2 weeks. I don't want to step in front of a freight train. The trend is what the trend is. If you want to fade the move, that's up to you, but I wouldn't do it. If it pulls back here, any decent pullback, I'm looking for areas to get long. That's how I trade. And I like to hold and I like to let the trade develop and give a decent stop. So going back to, let's go back to the daily, which is down here, and the overnight. For example, if we were to come back down here in the next few hours before the US opens and we come down to the point of control again, unless we have a big sweep or stop pick that wants to rip through the bottom here and really get to retest the overnight low, I'm probably looking for a chance to get long gold and ride it up. Also, if it happens during tomorrow's real trading hour session in the US, I would do the same thing. So that's kind of where I see gold. As far as news goes, we have some heavy news at the end of the week. Let's just pull up our news here in Project X. It's so nice that we have everything all together in one software. Makes it very, very simple. Tomorrow, there is some stuff, but it's not crazy move. Sorry. Come down here. We got on Wednesday, September 10th, US PPI, month over month, core PPI, and year over year. So that's Producers Price Index. That's going to be a big thing. We'll move markets, probably will move gold. Again, September 11th on Thursday, we have U.S. initial jobless claims and CPI. So again, more movers going into probably what we expect the Fed to do on September 17th with potentially lowering interest rates by 25 basis points. I mean, everything's baked in on that. What happens to gold? I don't know. We could have a situation where we're buying the rumor and we sell the news, meaning right now gold is ripping up in anticipation that Jay Powell's going to cut rates. But you know what? Whether he cuts or doesn't, sometimes when the news comes out and the decision has been made by FOMC, it does the opposite. So just be careful. We're trading an instrument like gold that is very erratic. It doesn't move like the indices do. So just keep, always trade some stops, put a bracket in there or an OCO, and make sure you have a stop at least to protect yourself. But that's kind of what I'm looking forward to on the week and possibly through the weekend. But all points north, guys, on gold. All points north. Anyway, hope that helps. And again, this is just the initial demo version of this. So everybody who's watching this, I don't typically trade gold. I've just analyzed it for the last half hour. I'm trading this no different than I trade the indices. And that applies to all futures instruments in my book. So if you like what I'm doing here, I will refine this and it'll get better. But until then, I hope you enjoy this. Thank you.
Hola Prime. Trade with transparency.